Welcome to the Dividend Talk podcast, episode number 23, Berkshire Hathaway. Hey guys, welcome back to another episode of the Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European DGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to our channel, please hit the like button and subscribe to us. And check out our previous episodes on YouTube and Spotify. See you on the inside. Welcome back to another Friday night episode, guys. Pleased to be here recording. Going to check in on my buddy, European DGI. How are you doing?
Oh, really well. Friday night, weekend started already officially. So I'm really looking forward. Lots going on this weekend. So how about yourself?
Good week. We're keeping it light tonight, just water. There's no wine or tequila, so this should be interesting. Oh, actually, you do have wine. But I know I'm looking forward to it. We're going to talk about the godfather, I suppose, of the dividend investing world. So I'm looking forward to having a look at the 13F and seeing the moves Berkshire are making. But before that, we might just cover some light news. I believe you have some news that is very, very cool, actually.
Well, yeah, because actually what caught my attention this week was not so much about American politics again or some dividend hikes, but you gotta love the country Belgium. So when Phil's listening, Phil Sackler, we know he lives in Brussels. So Phil, this one's for you. They sold a pigeon for $1.9 million US. And what many people might not know is that in Belgium there is a lot of pigeon trading going on because there's a lot of competition around pigeons. So they sold one for $1.9 million US. And it's actually quite unique because this one was of the female gender, not a male, but a female. And usually the males are a little bit more expensive because, they get to make more offspring. So, it's not bad being a pigeon if you're that kind of type, I would say. But what I find really interesting is that a pigeon only has a lifespan of 6 years. So I don't know exactly how old the pigeon was. I couldn't trace it back, whether the pigeon was already 3 years, 4 years. But for them, 1 year is probably the equivalent of 15 years for us. Yeah. So 1.9 billion. Talk about amortization on a pigeon. I don't know how they put it in the books either. Yeah. So if there's someone who is experienced in accounting when it comes to livestock, like pigeons, let us know, because I'm so interested in this, because the other time we did the show about the balance sheet, I don't know if it would be a short-term asset or a long-term asset, as an example. But hey, pigeons, yeah? And it gets even more interesting because it caught my attention, so I started really diving into the history of pigeons. And what I found out that one of the godfathers of Wall Street, Mr. Rothschild, when he built up his fortune, and specifically in the 19th century, what he did, specifically in Europe, for where he had his, let's say, his holdings, his companies, he used pigeons to transfer information between the two, let's say, cities or offices, because it was the quickest means of transport. So this was like the early days of high frequency trading, but then using pigeons. And with that, he had an edge on financial information, and he was able to amass more wealth than the others. And this, I found this really interesting because, pigeons have been used a lot for communication, but I never knew that these were kind of like high frequency trading, how you say it? Objects, let's say.
First of all, you sure you weren't watching Game of Thrones or something?
No, Game of Thrones, you know my opinion. After watching half the season, I only saw a giant and a midget having sex all the time. So, yeah, no.
But it's crazy. So maybe pigeons might be the actual national animal for dividend investing. Who knew they were so prominent in the investing world?
Yeah, if you could just go to every market square in a European city, steal all the pigeons. Let's say it would cost you 100K to do that. I mean, there just needs to be one pigeon that you can sell for 1.9 million. Just one clever pigeon. I mean,
How
you
hard
can
could
be a
that be?
millionaire within a year.
How hard could that be?
Exactly. So let's go to some other news instead of pigeons.
Yeah. So this week we all know that I like to. My son has a keen interest in investing, and one that he's always watched or always wanted to look at is Roblox, because he plays this game religiously all the time. I give out to you, my PC is as slow as can be because he has this game on it, and it's just constantly running. But they kind of a strange time, but they're going public. I'm not quite sure why they're doing that now, but it's definitely something to keep an eye on. I mean, the revenue last for the first 9 months of this year was what, 588 million, which is quite significant for a game that's free, for example. Um, so I always try to keep an eye on the trends and what's in and what's out. And like my kid is 10, but they know what's going on in that kind of world. So whenever they say something, it kind of sticks in my mind. So when that popped up to say that they are going public, it definitely caught my eye. So it's one I'm going to watch. I'm not into IPOs, but my son might actually want to buy some. So if he does, I will certainly help him do that.
So I have no clue what it is, but is this something like Minecraft? Should we think about it like that?
Yeah, you could think of it like Minecraft. It's the same kind of format. They go into all these mini worlds, and they can build up all different scenarios and games and so on. It's pretty cool. He's created some cool games and cool stuff on it, but maybe we're way too old for this.
Well, yeah, because I see my son all the time playing Minecraft, and sometimes I play with him, but no, I prefer Lego.
Lego or Meccano. Hey, but we're old school. So that was it. So we might just dive into the main topic. We keep it nice and light this week. Talk a little bit about Berkshire Hathaway and what they've been doing over the last quarter, and maybe our thoughts, particularly around the dividends stocks. So do you want to have a little talk, give an overview of their top additions or what they've been adding this quarter?
Yeah, so I found it really interesting. And effectively, when we went through the 13F together, one thing we noticed is that they were big into healthcare stocks. So, and actually, quite equal weight. So it sounds like Uncle Warren is not sure which one is the right bet. So it seems to have been diversifying a little bit. But they bought for 1.8 million in AbbVie. Well, I think that's a stock that many people in our community are really interested in holding it or actually increasing it even, but also Merck and Bristol Myers. And I mean, these are as good as dividend stocks as you can get it. Now, why healthcare, right? And I think there are a few things here. One, I think there is a Biden administration coming up. Yeah, so that might have been a Democratic play here, because I think that Trump was really pushing for price cuts. Really, he was quite tough on pharma. And what I know, at least from when I was studying it a bit like half a year ago, to understand what could be the impact of the Democratic nominee if this person would win, it became clear to me at that time that I don't think Biden will really challenge the big pharma companies. Yeah, he will want to do something on healthcare, but I think he's not targeting big pharma, and unlike Trump, who's all the time calling them out. So I think this is a play on on an undervalued industry in general, and I think they will probably be in it for the ride, pick up some dividends. I cannot imagine that these will be like long-term holdings for them for over the next decade. So that's not how I see it. But I find all three really good buys. I'm already having a full position in AbbVie. But there was also, they bought a little bit in Pfizer, not so much, just 136 million. I actually don't even know why. Maybe it's just a small play on the vaccine news. Yeah, yeah. And yeah, I think what also new addition maybe is worth mentioning besides healthcare is Snowflake. And I cannot imagine that Buffett went into the IPO with Snowflake unless it was for them such kind of a one-off quick buck by having an early ride-in and therefore quickly making some money with the IPO. I see Buffett as such a person. I mean, we know what he did also in the financial crisis, quickly getting things for a 10% yield, just to some coupons, and sounds to me a similar deal here.
Yeah, I can certainly see why healthcare is attractive, and we all know, as we all know, Abbey V is probably one of the ones that in our world, I suppose, on the Twitterverse is well renowned, and everybody seems to like that one. Pfizer for me is purely vaccine related. And it's an interesting theory you have on Biden, but I'm not sure when he opened these positions. Was it before the election or after the election? I don't know if you know.
Well, it's, the 13F is officially the list of holdings per 30 September. So it was before the election.
Was before. So he was gambling before, you reckon, before the election results
over
were
the
in.
summer.
Yeah. But I still think healthcare coming out of this COVID situation, those stocks in particular, I think will do very, very well. The Pfizer one was obviously probably after the vaccine news, maybe, or maybe he knew. Was when Trump fell ill with COVID. What, and Pfizer are the ones that came out first and said they had some vaccine.
Regeneron.
Yeah. So maybe it has some of that. But the Snowflake one is particularly uncharacteristic, isn't it? It's one that stuck out for me. I mean, I would not have expected to see that in there. It was quite a big position for him in terms of going in for an IPO. So maybe he got in early and got as you say, got a special price. I'm not sure.
But one thing that people, sorry.
No, I was just going to say, I definitely don't see him holding that for a very long time.
Okay, so one thing that I think people should know about the current pharma stocks. So many of those companies are delayed in their blockbusters because they cannot do properly clinical trials. To do proper clinical trials, you need to have hospitals open. When there's a second wave now, hospitals are not really open. I also heard that the amount of cancer, the intake of cancer patients into hospitals has significantly dropped. It's not that suddenly cancer doesn't exist anymore in our society. It's just because people don't have the access at the moment to proper healthcare because our healthcare is overloaded with COVID-19. And you will see this in the coming back in the revenue numbers as well. You will see this coming in the news that, for instance, clinical trials are delayed. So this is putting stress on the pharma sector at the moment, specifically big pharma that's really depending on these long clinical trials, and they are losing money with that quite effectively because clinical trials are really expensive. And the moment you discover a drug, I think you have 25 years to earn money. So you want to really go as quick as possible through your clinical trial to get maximum out of it, right?
Yeah.
So this is a big issue for pharma companies at the moment.
And then looking at his overall portfolio, it's interesting to see he added a little bit more to his Bank of America, considering and we'll talk about what he sold, but considering he's been selling off banks, and they're still, I think, are they second or third highest in his portfolio?
Yeah.
I find that quite interesting on why he's continuing to stick with Bank of America while he's selling off JP Morgan and selling off Wells Fargo. He added a little bit to General Motors as well, and I think Kroger, the consumer staples. So they were his additions this month. Kroger's one that kind of interests me a little bit. I haven't really looked into him too much, but looking at them just before we came on, and they seem to have solid dividend growth, I think up around 12% over the last 10 years, and decent payout ratio. I think they've been paying for 14 years, so it's probably one I might have a little look at. Maybe he's after driving the value out of him now. The price might go up for a little bit, but To be certainly one that skipped my radar for a bit, but
So I think that he bought actually Bank of America quite low, at a quite low level. I remember. I think it was somewhere in the low teens. So he has just a really good yield on cost on this position. They increased their position with 9%. Overall, actually, from portfolio percentage, it didn't really change a lot, but that's because of all the other additions that they did in the portfolio as well, which is also really interesting, right? So they were probably trying to keep up a little bit, just adding a little bit. Personally, I don't have any bank in my portfolio. But if I was, sometimes I've been looking with one eye at banks, and then if there was one bank that always attracted me, it was Bank of America from a valuation point of view.
okay. We'll just have a little look then at what he sold. So he obviously sold out of Costco, which was pretty dismal timing, as I mentioned to you off air. It was just before the special dividend, and they missed out on just a small amount. I think it was about 43 million in special dividends. So that one didn't quite work out too well for him. That's a large amount of money, isn't it?
Yeah, and then I'm wondering, right? I always see Uncle Warren as someone who has like an edge, in investing. So I can imagine that a CEO just even calls Uncle Warren and just say, hold on with your sale a little bit. I don't know if it's even allowed, but I can imagine that they are just talking about, hey, what's up? What are you going to do with the dividends? So how come this didn't happen? Yeah, because when you read the stories from the financial crisis, they were calling Uncle Warren just directly. Yeah, so it seems to be allowed, these kinds of things. I don't know what it means with insider trading, but he's not an insider, right? With such a position, he's a shareholder. But I believe we should get the same information as Warren Buffett. But clearly, it has shown over time, also during the financial crisis, that this is not the case. So he has his network. I would have expected that he would have known something about it. But hey, maybe the world is a bit better than that, and that we indeed are equally treated in when it comes into the information sharing to us.
In a way, that's a little bit reassuring, isn't it, to see that in a strange way? Because like you, I would have expected the same thing. I would have expected them to maybe not to ring him directly, but they could pass in a function or something and casually drop in, oh yeah, we're dropping 43 million in special dividends for you. but I mean, look, it's good to see. It kind of humanizes him a little bit. He does, I don't know if it's a mistake, but he does have bad timing and stuff, and does make certain mistakes, and some things do go against him. So it does humanize him. Like, he is looked at the Godfather that never makes mistake, but history has shown he has time and time again. He's just his winners outweigh those mistakes, which is what served him so well. So,
well, let's be clear, right? This was just 0.5% of his whole portfolio, so it was not it was not Apple, as an example.
Yeah, and I suppose we're getting caught up in the money value of 43 million, which for us is
financial independence.
Yeah. For Warren Buffett, that's pocket change.
Yeah, exactly. So what's interesting is that for me, he reduced quite some positions. I think almost 9 or 10, and value-wise, he actually reduced the most in in Apple. He reduced 3% of his value there, and it seems like they've been just trimming off a little bit. I can imagine, because I think they started buying around $100 before the split. Yeah, so he has made so much money on this one, and it's and mainly due to multiple expansion. If you look over those 2-3 years that he has been holding these shares, so I can imagine that they're starting to take off a little bit from this position, but it's still by far the biggest position, because it's now 45% of the portfolio, almost. Let's say 44, and it was almost 48. So it's still by far, and with this you could say that at least from the stock holdings that they have, they're just almost a pure player in IT stocks, right? If half your portfolio is in a single stock.
Yeah,
and this reminds me about one of those quotes from Buffett, like diversification is for idiots or something like that. It just means that you don't know what you're doing. And of course, he has like God knows how many holdings, But if you've got half your portfolio in one stock, I think it's not the story of how we look at diversification.
Yeah, it's crazy. And you just roll back 5 years, 2015, they only had 8% in technology, 8%,
Yeah,
and fast forward, and now it's 50% nearly. So,
yeah.
and most of that is you're right, it's true appreciation and buying so much at a low price, and it's after, I don't know, quadrupling or whatever it's after doing in price wise, but it's it's certainly shown that his bet paid off, and maybe he does know a little bit more than what we think.
Yeah. And besides that, from the positions that he sold, it was also interesting to see that he sold a lot of positions in finance stocks. And one in particular, I would really like to call out as Wells Fargo. So I'm this person that went watching on C-SPAN, those 3-4 hour long hearings where Elizabeth Warren, the senator, was grilling what was his name? Strumpf or something like this, the CEO at the time. I will never forget. He had his arm broken and he was sitting there like a loser. He was totally being grilled. And I all the time was thinking, like, okay, at the time I think they had like $54 for the share price. And I thought, like, why is Uncle Warren not selling out here? Where is his principles? I mean, they made 3 million, I think, fake bank accounts. God knows what they did more. They fired a lot of low level people because they were speaking up. I mean, this company is rotten from the inside. I mean, I also don't know if you've seen the episode on Netflix about Dirty Money. I think it is about Wells Fargo. This is a company that's so rotten from the inside, and I don't understand why Warren Buffett wanted to keep being associated to it. Yeah, it's just not worth it. And now he's selling out when it's half of the price from when it was at that moment in time. I don't understand it, really not. It's a rotten company, and he starts to now sell it. Yeah. Anyway, you hear me whining again.
Yeah, but he's been selling this for quite a bit, hasn't he? He sold it last quarter as well. Like he held 10. That was 10% of his portfolio not so long ago. It's now down below 3. Is it 1.3%?
Yeah,
1.31% now. So he's after selling a significant amount this year alone on them,
yeah.
which shows he has lost faith. But maybe he lost faith, as you said, a little bit too late.
Yeah, I think there are such rules that we have as investors as well, right? If there's fraud or something like that, that should be for us a sell signal, because
Mhm.
it means you cannot trust management and you don't know how deep this can of worms is. Yeah, so yeah, it's actually learning for us. If he would have sold straight away, he would have had much more money and could have reinvested it in one of his other stocks, and he would have been way better off. But he kept on to this rotten stock, and well, he can eat his own on blood here now. Yeah,
Yeah,
I'm not.
maybe he was investing with emotion on this one. One of his core holdings for such a long time, and
Yeah,
I know as investors we try not to get attached to our portfolio, but you do. You get attached to some stocks.
yeah,
Everyone has their favorite stocks, and maybe for Warren, this was one that he was emotionally attached to,
yeah.
and it just took him a little while to realize, you know what, I need to get rid of these. But looking at his portfolio, so did his portfolio grow over the quarters?
Yes, actually, his portfolio grew with 13% over a single quarter. This is a lot. I can tell you, my portfolio didn't grow 13%. So, and we are talking here about the summer, right? Until the end of September.
Yeah,
So his portfolio grew really a lot, but I think it's just in lockstep with Apple. It's just that the growth of
yeah,
Apple and the share price.
yeah. You could imagine a totally different scenario if Apple didn't do so well. You could easily see that negative. So Apple have a lot to do with that. But it's still, I mean, it's still pretty awesome return at 13%. Mine, I said,
Yeah.
mine's up around 4 or 5%, I think maybe, but
Yeah.
13% to be pretty awesome.
Yeah, it went from 202 billion to almost 229 billion. Imagine that.
It's
Just
almost like
29 billion.
it's like play money when you say it like that. So when you look at his stocks, right, from the ones that he bought, which ones would you buy?
So I've got Upfee already, so that one I wouldn't do. I would have probably joined him in Merck. I find Merck a really interesting company. And it is just that I don't have place for it anymore in my portfolio, but I would have taken that one. I find it a really attractive company, good portfolio. I think they have enough tailwinds. So yeah. How about yourself?
For me, it's probably still ABV. I don't have anywhere near a full position in them yet, so I like to keep following up. But T-Mobile is one that interests me as well.
Mm-hmm. Yeah. Cool. Yeah, and then maybe the last one is just for people good to know. If you look at his top 10 holdings, they make already almost 90% of their portfolio, right? So even though they might have 40 holdings, it's really Apple plus few like Coca-Cola, Bank of America, and then you have it already almost. So it's really those few stocks that make up most of their portfolio.
Okay, awesome. So that was our quick overview on Berkshire. I mean, they're always an interesting company, and they're followed by millions and millions of people. I don't personally follow all their moves or agree with all their moves, but it is good to see what seasoned investors like Charlie and Warren are doing. So I hope you liked it, and if there's anything we missed or anything we should know, please let us know. It's always good to hear from everyone. So we might move on to our listener questions. We have a few of these. So the first one is from Phil. Phil always gets in early, so we can always count on him. But the first question is, what was the hardest investment decision you have ever made?
I think for me it was selling Tupperware. I mean, not literally selling Tupperware, but the company Tupperware. So I really, really was convinced that Tupperware was going to make it. I know in Europe we're a bit over it, but they were really growing. At least the whole bull thesis was about the empowerment of women in APEC. I was totally bought in with this theory, and I will never forget the CEO. His name was Ricky Goings. I mean, great name for a CEO. And he could really talk well, and he just convinced me. And I like the products that they were doing. And then it started like quarter after quarter, they were giving currency headwinds as the excuse. And at a certain moment, Tupperware cut their dividends. And then I really thought, like, what do I need to do with this stock? Because I was still attached to the vision, but at a certain moment, I just sold it. I'm so happy that I did it. But I remember just making this decision really took me 2 weeks of, okay, but am I sure? Am I sure? Should I really sell it? And I read the annual reports again to verify everything. And then I just got a wake up call, and I felt like, no, this is just crap. The only thing he can do is communicate well, but the data says something else. And here's where I really fell in love with a CEO more than with the fundamentals.
Cool.
So then the next question is from Danny. What are your thoughts on the end of the year? Do you think there will be a rally into the close of the year? Or do you believe there's going to be a pullback between now and New Year?
I mean, we've been asked a question like this a few times, and I think I've got it wrong every single time. So whatever I say here, just do the opposite, and you'll be golden. But I still believe there'll be a pullback. I think the market, I overreacted is a harsh word, but I think the reaction was quite strong, given that the vaccine was announced, but it's still not proven. It's still not out there. There's still trials to be done. There's still so much hurdles. It was just a little bit of good news in a particularly bad time. We've still got America only starting to go into lockdown, and the bad news is still out there. So I'm expecting a pullback. But I mean, as I've been said, I've been expecting a pullback now since May or June, and it hasn't happened. So not investment advice. That's what I'll say.
Good. I'll take the next one from Wolf of Hardcourt Street. With the big run up on Bitcoin recently, have you considered adding some to your portfolio? No. I'm such a person that has been observing Bitcoin since $100 share price and thinking maybe I should buy just 2 coins. Never did it. Will never do it. I'm probably on the losing end here. Actually, I can't even be bothered or caring about Bitcoin. So
I could rant here, and actually, just for Dividend Dame, we're just going to have a 1 minute crypto talk because I know he loves crypto so much. But Bitcoin is really breaking my heart. My brother texted me today, but by coincidence, about this, saying Bitcoin is at 18,000, and I've stopped watching it because, again, I've probably missed out on this run. It took me a while to get to one Bitcoin, and I managed to get in when it dipped. It dipped around to about 3K, and I got a full Bitcoin in, and I sold it at 6K, and I was happy. But I said to myself at the time, when I get one Bitcoin, I'm not selling it no matter what. And I did. And now it's at 18K. So I don't even want to follow it. I don't want to hear it. I don't want to know anything about it. My only concern is I'm starting to hear lots of noise. Again, like my brother texting me, or nearly every second post I'm reading on Twitter the last 2 days is about crypto. When this happened the last time, there was a huge run up, and a lot of people were buying in too late and buying in when it was hitting 20,000 and lost a lot of money. And that's my fear with crypto. It's great if you get in early, but if you get in late, it falls hard. So I would be wary.
Mhm.
I'm not getting it in. I understand the fundamentals of Bitcoin. I don't see a long term use case for it. I don't know what the end game for them is. I know they have PayPal adoption and Square adoption, but I think the end game is probably not Bitcoin. It's always going to be the first mover and the grandfather of Bitcoin. But I could, like we spoke about a digital currency. The EU are coming out with a digital currency.
Yeah.
I think that's where the end game goes, and Bitcoin disappears. Not maybe not disappears eventually, but it's certainly not going to be worth what people believe it's worth. But hey, look, as I said, I could be wrong. I don't know. I'm kind of kicking myself that I sold out for the amount of time it took me to get that Bitcoin, and then to sell out early is it's a lesson for me, and it's a lesson for me when I take it into my investment. If I say I'm going to hold, just hold it.
Okay. So let's get back to dividend talk then.
Sorry, Dividend Dana.
So Piotr, a fellow citizen from Poland, I have a question. This is his question, right? I have a question. How do you handle high appreciation? So, and I find this really interesting, this question, because this question went so often through my mind. So imagine that your initial investment is $1,000 or euros with a dividend yield of 5%. The stock price increases and now the value is 3,000 euros. The dividend increased too. And now your yield on cost is 10%. So value-wise, you get 100 euro in dividends. Wouldn't it be better then to sell off and buy a new stock yielding at 5%? So you will get 150 euros in dividends from the new investment of 3,000. Let me answer this one. One thing that I learned is to never sell your winners. And I've seen it now with Microsoft and with the others. These are the ones that are pulling your portfolio up. These are the ones that keep you smiling. In the beginning, I started to do that, to trim off on my winners, and more to get to buy other stocks so that I would improve my portfolio yield. It has actually never done me really well. Maybe from a cash flow point of view, yes, but then if I look at Microsoft dividends growth history over the last few years compared to the others that I bought, then Microsoft is just outpacing everyone. So my recommendation here would be to just never sell your winners. Let them ride, because if they are appreciating so much in price, it's probably because they have good fundamentals behind them, and there's a high likelihood that they will grow quicker, grow quicker than the others. I understand this question because it's about opportunity costs. Yeah, that's really the question here. So wouldn't it be better just to, and some people do that, right? They buy growth stocks, sell the growth stocks to buy dividend stocks for that. I'm not doing it. I learned that I'm not good at it, and then you're into trading, and I'm more a buy and hold investor.
Yeah, I've got two issues with this, and the first one is that that ignores tax. So if I was to sell that and the value is now 3,000, I do not have that 3,000 to spend on stocks. I pay 33% capital gains. I now have 2,400. So automatically I'm losing 700 on tax. So I'm not in that position. The second issue I have, it's almost like chasing yield. You're looking for a new stock yielding 5%. You can easily get burned doing that. If you have a good company and they're increasing and the fundamentals haven't changed, I don't see any need to sell them at that moment. I can understand the psychology behind it and how you would think that it would benefit you long term. But for me, uh, again, like you, I see that more as trading. And if that's part of your strategy, then that is absolutely fine. But if you're a long term buy and hold and investing for income and stable income, for me, it's not the right decision. But I can see the appeal. But I think tax, depending on your tax, if it's in a tax advantage account or so many situations, it's certainly different. But for me, I don't have it in a tax advantage account, so it's not a great strategy for me.
Okay. And then the next question comes from Kalen Churario. I think he's really, he has listened to every show of us. And he asked today, what is your plan with your real estate stocks for the moment? Buy, hold, or sell? And specifically question to you there.
Yeah, I wrote a post recently on a couple of REITs, and I'm holding at the moment, and I really want to add some European REITs to my portfolio. So I've been trying to research some of them. I haven't found any particularly that I want to get involved in yet, but I'm looking to buy at the right price. There's still some that are undervalued at the moment, but certainly buy or hold. I'm not selling at the minute. And then we had a question from our friend Russ at Dapper Dividends. And he asked, have you ever used tax loss harvesting to exit a position you no longer wanted to be in?
Yes, I do that every year. Sometimes I sell stocks, not too often, but when I sell them, it's mainly because of, for instance, stock splits, that I don't need the junk that I'm getting in my portfolio, or because of, for instance, option trading. And effectively, I'm using all my general electric shares that I'm still having every year for tax harvesting. So it's now my third year that I will use General Electric again for some tax harvesting. I typically do it in the last week of December when I do all my calculations about my capital gains, and then it avoids me from paying tax effectively.
Yeah, I mean it's legal, so why not use it to your advantage?
Then the next one is from the Sunday Investor, and he's asking, is the market overestimating the ability for a coronavirus vaccine to cure our economic problems? People still have to be convinced to get one.
Oh, this one kind of crept in. It must have been late. I didn't see this question, but I think I've touched on that above when Danny asked what we think about the market. I think there is a slight overestimation on it. I mean, as you said, people still have to be convinced to get one. And I look at just someone like myself. I don't know if I could put something in my body without it being thoroughly tested. I don't know if I'd put it in my kids' bodies. And I'm sure I won't be the only one to think like that. A vaccine is good, it's needed, but I just feel it's a little rushed. So, I mean, I don't know. I'm analytical. I'm like you. I like to see data and results and that it's proven over time. So, I can still see. Look, I don't think we've seen the worst of what happened from COVID, and I still think that that's to come. But maybe that won't happen till late next year.
So I would like to see it tested on some of my Dutch family first. And then after half a year, I might try it as well because we have similar DNA.
Very good.
The last question is from Enzo, and I will take that one. And he asked me if I could mention about why Ahold is not part of the Noble 30 list. Well, Enzo, it's actually really simple. And then I introduced Ahold Delhaize last week in the show. they had a big scandal something more than a decade ago, and effectively, therefore, they're not part of it because the Noble 13 members have at least around 22, 23 years of without a dividend cut, so mainly dividend growth. So that's a simple reason there, Enzo.
Cool. Thanks a million for the question, guys. We really appreciate them all. Some great questions there, and we love answering them. So keep them coming. So
that's now the stock pick of the week, and we go to you. And I saw your post this week about Irish stocks, so I'm really curious if you picked one of those then as a dividend stock.
Yeah, I gave you the week off this week, and I said I'd pick the stock. But you're right. I did write a blog post on Irish dividend stocks. We don't have many. We had a few more before the pandemic. So one of them that I really wanted was Paddy Power Betfair, but they decided to cut their dividends. So, but what I went for this week is Glanbia. And I don't know if you remember, but in one of our podcasts, we were talking about investing mistakes, and I flagged these up as one of them. And the reason I flagged them up was because I bought them for no other reason than they paid a dividend and they were Irish and nothing else. I didn't look into anything else. And after that, I still didn't look into them. I just had them there and I kept them there as a reminder. But when I was doing this post, I think it actually turned out to be a little bit of a masterstroke. Maybe I should just pick stocks blindly in future. But for those that don't know, Glanbia they're a mid-cap company. They have a market cap of about 2.97 billion. And they started out as kind of like a dairy farm in Ireland, and then they merged with Avamore Foods and Waterford Foods. So Waterford Foods would be close to where I live. So Glanbia is pretty prominent around my area, particularly in Waterford and Kilkenny, but they're all over Ireland. But they have a big presence in America and places like that as well. So I've seen some of their plants, cheese factories in America. So they've transformed over the years from basic Irish dairy, so cheese and milk, to like a global nutrition brand. And one that you may be familiar with is Optimum Nutrition. So anyone that goes to the gym and all this, it's basically whey protein. And this always cracks me up, but for years and years, they were throwing away this as waste. They were wasting all this. And now it's their number one business and where they're making the most money, which is crazy. Some other brands you might be familiar with is Slim Fast. I'm not sure if that's, but Slim Fast is pretty big. And then they also make these American style cheddar cheeses. So I'm quite familiar with the cheddar cheese. I'm quite familiar with the process of making them. As I said, I used to work not for Glanbia, but I was contracted into one of their plants in Idaho, and it was on these cheese plants and RO systems. So I'm quite familiar with them. But why is this company interesting from a dividend perspective? Well, over the last 10 years, they've had a compounded annual growth rate of 12%. They tend to keep their dividend payout ratio between 25 and 35%. So the balance sheet is very, very strong. But their revenue and earnings have been growing year on year on year as well. So they've been doing quite well. I really love the rebranding into the nutrition world, and I'm really confident in their future. So I suggest anyone that doesn't know them, just look them up. They seem to be a really solid dividend stock. They actually talk about their dividends a lot more than Irish companies do. It seems to be part of their plan, so they want to give it back to the shareholders. So yeah, it's really interesting. And if you look at their 2020 results, they grow quite strong. COVID had an impact, and revenue was down 2% based on last year, but fundamentally they look really strong. I currently have them valued around €17 as well, and they're at €10 now. So I have them really, really undervalued, and they're definitely worth checking out.
Super. So I will definitely add it also to my watch list, because you really, how you say it, intrigued me, because I'm a big fan of nutrition. And why I'm saying that, DSM, this Dutch company, transformed into a nutrition powerhouse. And I think when we think about feeding the world and such, and what's ahead of us, I think a smart way of dealing with nutrition and also related to all the what you said, slim fast and such, and all the health concerns, obesitas. I think it's really one of those topics, and actually Novo Nordisk also with diabetes and such. I think that will earn a lot of money for many companies that are in this kind of business, trying to tackle this kind of health-related topics.
Yeah.
Cool. Hey, thanks. So yeah, the bar is high again for me next week to come up with another stock to inspire you all. But thanks. I very much enjoyed it today. It was for me really fun exercise to go into Uncle Warren's 13F this week. And yeah, to all the listeners, thank you again for all the questions that you've been sending, also for your continuous support. We're already far in the 20 now when it comes to the episodes. And yeah, we're having so much fun. So good stuff. Thank you.
Thanks a million. We'll speak to you all soon.